Hello everyone, it's Wednesday, December 3. Today we will analyze the charts for the euro and the British pound to assess potential market movements. Yesterday the euro attempted to rise above 1.1623 following the release of Eurozone statistics. The bloc's consumer price index for November rose to 2.2%, up from 2.1 in October. While this figure slightly exceeds the summer average of 2%, there is no significant cause for concern from the European Central Bank. Core inflation met analysts' expectations, remaining steady at 2.4%, a level it has maintained it since September. This stability allows the ECB to continue its wait-and-see approach aimed at managing price pressures while supporting economic growth. Tuesday's data also revealed that the Eurozone unemployment rate increased to 6.4% from 6.3%, but this shift does not raise immediate alarms. Later in the day, the euro came under some pressure. However, buyers ultimately regained control, and the European currency resumed its upward trajectory. Currently, the euro is poised to reach a new one-month high. Turning to today's macroeconomic calendar, we have a wealth of reports coming in from various European countries. Data on services sector activity, along with the composite PMI, will be released for Italy, France, Germany, and the Eurozone as a whole. All these indicators, with the exception of France's, are above the 50-point threshold, signaling expansion in the services sector. If the data exceeds consensus estimates and sees upward revisions, the euro could extend its bullish momentum. The UK is set to release similar data, with the UK services PMI expected to show a slowdown to 50.5 in November. If the result disappoints, the British pound may come under pressure, which could limit its upside potential against the US dollar. Notably, sterling still cannot break out of a sideways trading range. A price movement above the upper boundary of this range would confirm that the bullish trend remains intact. As for the statistics from the United States, traders should pay close attention to the ADP National Employment Report, projected to show an increase of 10,000 jobs in November, following a gain of 42,000 in October. Given the current concerns surrounding the labor market from the Federal Reserve, a figure that beats market expectations could bolster views that the Fed will keep interest rates steady at its upcoming meeting. Conversely, disappointing data could lead to a further decline in the dollar. Additionally, the US is scheduled to release its services and composite PMIs, along with the business activity data from the ISM. Preliminary figures suggest a slight slowdown. However, overall indications are expected to remain above the 50-point mark, suggesting continued expansion. It is also worth noting that US industrial production data is on the agenda. But this report reflects September's performance, so it is unlikely to have significant impact on market sentiment. The primary focus for today will be on labor market figures. Now let's move on to technical analysis. The 1-hour EUR/USD chart suggests that a false breakout at 1.1651, a strong resistance level, could generate a sell signal, potentially driving the euro down to 16.23, where buyers are unlikely to step in. Alternatively, if the price breaks through and consolidates above 16.51, supported by positive services activity data from the euro area, the euro could rise to 16.78 and possibly reach 1.1703. At this level, I would recommend going short on the rebound, targeting an intraday correction of 20-25 pips. Short entries at 16.51 at 16.78 should only be considered in the event of a false breakout. If buying activity is muted at 16.23, it would be wise to postpone long positions and look for entries at 15.91 on a false breakout or 15.58 on a rebound, targeting move of 25-30 pips. Speaking of the British pound, the active struggle for direction continues. Long entries could be considered at 32.26 if the price declines and forms a false breakout. If the UK releases positive data regarding activity in the services sector, a crucial driver of the country's economic growth, the British pound could rise to 32.50. A breakout and consolidation above this level would push sterling up to 32.72 and potentially open the path toward 33.00. At this mark, it would be prudent to consider short positions on a rebound targeting a move 25-30 pips. Short entries at 32.50 and 32.72 would be relevant following a false breakout. Alternatively, if buying activity at 32.26 remains weak, long positions could be opened at 1.3203 on a false breakout or at 31.77 on a rebound with the expectation of a 25-30 pip move. Good luck to everyone.